Russia breaking news: Russia's economic decline is illustrated by these 5 figures. Vladimir Putin's invasion of Ukraine in February 2022 has been a major factor in the decline of the Russian economy. The country's energy superpower status has also fallen along with its current account balance and the ruble's value. Meanwhile, both domestic consumption and production in Russia are quite low. Russia's economy has shrunk drastically over the past 16 months. Moscow was in charge of the world's 11th largest economy and played a key role as a reliable, widespread energy exporter before Vladimir Putin ordered the invasion of Ukraine in February 2022, triggering historic sanctions. Now, however, everything points to a sharp decline with no end in sight, from the currency's depreciation to the level of business activity. In an interview with Insider this week, economics professor at Indiana University Volodymyr Lukhovsky speculated that the breakup of Russia into smaller parts like the Soviet Union might not be such a bad thing for the world after all. It has the makings of an empire, complete with a strong leader. Extreme events are very likely to occur. The war has had a devastating impact on the Russian economy, as evidenced by the following 5 statistics. The ruble's decline. Due to geopolitical uncertainty in Russia, the ruble has been one of the worst performing currencies this year. After the Wagner Group's failed mutiny in June, the currency dropped to a 15-month low against the dollar as people fled the country in fear. The ruble has dropped more than 6.8% in the past month and more than 35% in the past year. Fall in the current account balance by 93%. The Russian Central Bank reported a current account surplus of $5.4 billion for the period of April through June, down 93% from the record surplus of $76.7 billion recorded for the same period in 2017. Moscow's inability to ensure imports and its profits from energy exports are eroding current account surplus, indicating that these factors are no longer supporting the economy. A decrease in physical volumes of export deliveries and a worsening in the price situation for the basic Russian export commodities, with energy commodities making the most significant contribution to the decline in the value of exports, according to a statement released by the Bank of Russia, contributed to a decrease in the surplus of the balance of the external trade in goods in January to June 2023 compared to the comparable period of 2022. Falling energy profits. In June, the Russian Ministry of Finance reported that oil and gas tax revenue had dropped 36% from the previous year, while profits from crude and petroleum products had dropped 31%. Before the conflict, Russia supplied nearly 40% of the natural gas and 25% of the crude oil used by the European Union. Since then, that number has dropped almost to zero, and despite Putin's efforts to find new customers in China and India, Moscow has been forced to sell energy at deep discounts. According to research data from Yale shared with Insider, monthly sales of vehicles in Russia averaged around 100,000 units before the invasion of Ukraine. Sales have plummeted to about a quarter of their previous all-time high due to a combination of factors, including rising prices, falling consumer sentiment, and insufficient supply.